Well, it's been a tough time for investors out there, but we are seeing the economy slowly reopening and markets bouncing back. For more on this, we're joined by Seth Allen from Cadence Financial. Welcome back to BT. And I know it's a loaded question, Seth, but is the worst over for investors?
Yeah, you're right. It is a loaded question. Everybody's asking that right now. I think people need to separate, or investors need to separate out the difference between the economy and the stock market. The economy is really looking at the present. The stock market's future looking and tends to look at other factors such as sentiment and what have you. When you look at what's happened, from the last time when we talked, and I mentioned that we probably went through maximum fear in the stock market, I still think that's the case, but I do believe perhaps from the stock market standpoint, we're going to see a lot more volatility in the coming months, and it could be, unfortunately, because of the second wave of the virus, or it could be a ramp up in the trade war again with China and the United States. We're hearing various things coming out of the U.S. on that front.
Okay, I'm glad you mentioned the volatility because I want to make the distinction between an investment strategy and a financial plan. Can you break that down for us?
Thanks for asking that, Thor. It's something that I often bring up with people. There's a lot of pundits right now talking about the need to have a financial plan, review it, and figure out what your goals are, and that's absolutely important. But there's a big part of that that's missing, and that's the investment strategy. Like, in other words, how you're going to get towards those goals. And the analogy that I use that people can understand is it's like building a house. Financial plan is the design of the house, whereas the investment strategy is more what goes into the house, in terms of building materials, people, and what have you. So when you're looking at investment strategy, the things you need to really be thinking about is asset allocation, your investment process, have an investment policy statement, figure out if you're going to be an active or passive investor. And, I guess the last part of it is looking at not just your risk tolerance, because that's not so important. What's really important is your capacity to be able to take risk. In other words, how much risk are you willing to take with your investments?
I love the analogy. You're always great for that, for breaking it down, making the information accessible. What sectors or investment themes should investors be looking at right now?
Well, assuming you have an investment strategy in place, I think that some of the things I've talked about in the past on this show, I think still hold today. You want companies who are still paying dividends, who are able to sustain themselves in this current environment, or even grow their business. So some sectors, which we've talked about in the past on your show, include renewables, such as, or better known as green energy, artificial intelligence, or AI as it's known, and also cloud computing. And then, once again, depending on your investment strategy, look at alternative investments such as gold. With all this money creation going on, it's ultimately going to create inflation, which is a great environment for gold to be in. So
for me as a layman, would I be interested in investing in things like video conferencing companies or biotech companies that are working on a potential vaccine? Is that something where investors could be putting their money right now?
I think that, the word I kind of use is Roman candles, is what I describe these type of companies. They shine bright but fade quickly. The problem is a lot of time, by the time you or I hear about it or notice it, most of the price is already, the share price is already priced in most of the upside. So as a new investor, there's not very much return perhaps left on the table. The flip end of it is, in terms of vaccines, if the vaccine's not going to work, which at this point for Moderna, as an example, is early stages, obviously we know what's going to happen to the share price. So I once again go back to really emphasizing to people they need to focus on having a proper investment strategy. Don't get distracted by these Roman candles that are out there. Just focus on what's important to you, which will allow you to get the goals you need achieved. And like I said, stick with it in the long term. You'll be just fine.
All right, Seth, as always, we appreciate your time and your insight. Thank you.
Thanks a lot, Thor. Appreciate being on here.
All right, that's Seth Allen from Cadence Financial at Raymond James. We'll be back with more BT after this.